good afternoon. So you ready to get started?
I am.
All right, so we're recording for everybody here listening. You can share this link later on, but let's talk to Jeffrey. So I am Marjorie Lohman-Greenbaum. I'm with the PIRE team at Keller Williams Metro Atlanta, Keller Williams Realty Metro Atlanta, and joining me today is Jeffrey Heckman with Southeast Mortgage. So
Hello, everybody.
So Jeffrey's a veteran mortgage lender with Southeast Mortgage, which is also headquartered here in Metro Atlanta. So Jeffrey's going to pretty much be able to answer any question I have about this market, this mortgage market. No pressure, right, Jeffrey?
None whatsoever.
So thanks for joining me, Jeffrey. Welcome.
Thank you. Thank you. I'm glad to be here. It's nice to have something as a little bit more of a distraction other than being sequestered in your home doing what you do on a daily basis. So yeah, I'm excited.
Your home looks beautiful from here. So
oh, thank you. Thank you.
Having a good time. So here's the thing. As a realtor, as you know, we get this question all the time when we're out walking around, talking to neighbors at a party, meeting new clients. You know, the question's always for us, how's the market? So I'm going to ask you, because we could have that conversation. That's a different conversation related to neighborhoods and statistics and such. But for our conversation on the market, my question, of course, is starting off with, how's the mortgage market? Can you talk to us about interest rates, timelines for people to close, a little bit of changed expectations perhaps people can have?
Yeah, definitely. Well, you know, as far as I'm concerned, the market is fantastic. It's a 10-day or 10-hour a day work week plus weekends these days. There is a lot of activity going on. There's a lot of questions too. There's no doubt about it, because we are in a different type market and scenario because of this nice little coronavirus that we have. So it has created, in my mind, a lot of opportunity, not only for clients to be able to refinance because rates have lowered in the conventional arena, but also it's a great time to buy. And we've got a number of clients that are under contract and closing, that are still out there searching, because it's kind of the same scenario. You know, when the stock market's down, you buy low and watch it go up. You know, it's kind of the same thing right now. People are seeing opportunity because there's not as much competition out there, I believe, because people are not leaving their homes as frequently as they were. And so those that are out and looking are having less bidding wars, I think. So yeah, they're able to get under contract a little bit easier because of the just a little bit lower volume of people out there. Does that seem to make sense?
That makes a lot of sense. And I think that's an experience I'm having is with people who really were ready, willing, and able to buy. They, some of whom are not at all hesitant right now with new practices that we do have in place, which again, right, I can talk about to people if they want to contact me about that. But yes, they're safe new practices. So people that really are trying and really do need to move, there are always going to be people who do need to buy and sell. Yeah, it's good to know that they can, and there are ways for them forward, and that's great.
And like last week, I just had a client that bought a condo. They relocated from Atlanta down to Florida. So they're starting their new life down in Florida. And of course, they moved, relocated, the whole 9 yards. And that was just last week. So in the real estate world, things are still happening.
Right. All right. Well, let's talk about some actions people can be taking right now to help them either insure or make themselves more eligible for a mortgage. What are some positive steps they can be doing? Maybe they want to buy in a month, but maybe they want to buy in 6 months or 12 months. What do you say to anybody maybe differently now than you would have said to somebody 2 months ago?
No matter how you look at it, with the way the mortgage world is, things are always changing, and preparation is the key. It's a lot better to start the process early, know what your circumstances are, identify any hurdles that you may have to work through underwriting guidelines, and you know, be prepared. Obviously, one of the first things that you want to do is you want to make sure that your credit score is at the best possible level that it could be. That is one of the driving forces. So one of the things that I like to see is people get pre-approved early. And that's exactly what I do. I do a pre-approval, not a pre-qualification. So I'm going to guide them on activities that they can do to improve their credit score if that's needed. If there's anything out there, we can identify it, resolve it in advance of them shopping, especially if their timeline is 6 months down the road. The other key piece of pre-approval is income. Knowing what type of income you have, how does it meet the requirements of the mortgage guidelines, and do you have I mean, if you're self-employed, have you been self-employed for 2 years? If you have part-time income that you want to claim and utilize towards qualifying, you have to have been on that job for 2 years as well. So there's some of these pieces of the puzzle that you need to know that you wouldn't know necessarily unless you talk to a mortgage loan officer.
Right, because there are just unknowns that until you're talking about your particular circumstance, there are some things you can't know till you get in there with the conversation with you.
Right, and like
things, yeah.
a lot of clients that may be hourly and they've been on their job for a long period of time, and they are getting overtime consistently. As long as they have a 2-year average of that overtime portion, we can calculate it. But if they just started on an hourly job and are getting overtime, but it's only been less than a year, we can't use the overtime, just their hourly wage. So knowing those pieces of the puzzle will make the process a lot less stressful for the buyer.
Let's talk about what sort of things would you suggest folks not do to put themselves in a position to be declined on a mortgage right now? Are there certain things that people might otherwise be considering doing? And and we're talking about here, if you can avoid these things, maybe explore with a lender first before you make certain choices. And I'm going to throw out that word forbearance here and let you maybe explain that a little better and how that can affect somebody's eligibility for a mortgage.
Yeah, when you're preparing, obviously, if you can avoid changing a job, making any large purchases, try to make sure that, you've got your money lined up for your down payment and everything, that you're not just moving it from account to account. That creates a nightmare trying to identify where did it come from, what was the source, just to make the process a little bit easier on you and the underwriter. I do like the fact that you brought up the word forbearance. That is the hot topic these days. I'm getting calls from clients left and right. Forbearance, it's one of those things where you need to be cautious, okay? If you're in a situation and you feel that that is the path that you need to take, then research it to the nth degree. What I'm understanding is, say you're able to defer your payment for 3 months. Well, in month 4, you're going to be making 4 payments. Those 3 months that were deferred are going to come due. And
I'm going to interject. We're talking about mortgage here, correct? When we say forbearance, yes. Okay.
Yes, mortgage forbearance. Right. So, while you think you're going to alleviate those monthly payments, they're going to come back and haunt you. Then if you're not able to repay that back at one point in time, that's considered a default. And then that's going to cause you to have longer waiting periods in order to be able to buy or refinance in the future.
Yeah.
It is not as great of a thing as what they're trying to present. So if it's something that you need to utilize, I understand, but if you can continue to make your mortgage payments, make them timely, it will put you in a much better position, and it will not be as costly in the long run, both to your wallet and to your credit.
Right, and of course, everybody has to weigh out their own circumstances and near future needs, but also to consider if you can avoid and seek out some other options for yourself, by all means, seek out other financial options. There are repercussions.
Some advice I've given to a couple of clients is, hey, if you can make an interest-only payment on your car payment to save a little bit that way, so that way you're not in default on anything, but you're not spending as much money on a monthly basis during this time frame where we're having some challenges.
Yeah. What about investing? So that's a different, realm of pre-approval. And some people, of course, are thinking right now, looking at the stock market and some other areas, maybe considering moving their money around and wondering if perhaps maybe they'd like to transfer money into an investment property. How are things tightening up or changing when it comes to getting approval for that secondary investment, real estate investment, not your primary home?
Pretty much it's the same thing. It's, we can do a 1 to 4 family investment property. Depends on your circumstances as far as how you want to structure it. We do have 15% down. It does have a mortgage insurance piece. So I'm always guiding my clients that if they're looking for investment, if they can put the 20% down, then that way they're going to cash flow a little bit better. If it's a scenario where they identify a property and they feel like they want to live in it for the first year and then turn it into an investment property, that's a win-win, because you're basically when you sign a deed for a primary residence, you're saying that you're going to live there for at least the next 12 months. So live there for a year, convert it to an investment property, it's going to cash flow. That's a great win. But I mean, the money's out there. I mean, and rates are great. I mean, when you think about it, investment properties were a number of years ago running 5, 6, 7%, depending upon the size and the type of property. Now we're running, upper 4s for an investment property, where conventional rates are in the low 3s for a 30-year fixed. So rates there, it's great. It's a great opportunity to invest. And it's a great place to put your money because, I mean, obviously, real estate is going to go up over time. It's somewhat like your 401k. We know we've seen a dip in it, but it will come back over time. Real estate's the same. It's a constant rise.
Right. And, and also for those who can take advantage of the market where there aren't as many people out right now. And again, even for investors, just getting out there. And again, we have very safe practices on how a person can still see a home, virtual, sometimes tours before they go into the home, sometimes not, depending, not as much with investment properties. But speaking of, people taking advantage of the times, just want to talk about the fact that, you've been in business doing lending for a lot of years, and,
Right.
You've been through some different shifting markets, recession, et cetera. What do you want to, what can you say to a home buyer or an investor even? Any sort of assurances now? We're not trying to just stay all positive, but, just perspective, is everything. And thinking in terms of where we are and that we're never going to remain in the now, right? Everything's always changing. So any
Correct.
bits of wisdom or sort of mindset you can sort of share with people, some practical or mindset suggestions for folks who are in a little panicky state about things?
I do believe that people that have been involved in real estate or buying, if they go back to 2008 when we had the crash of the market, they kind of feel like this might be a similarity. I don't think that that's the case at all. All right. What we're dealing with right now is totally different than what took place in 2008. This virus is put us into a situation that nobody's had control over. The government is doing different things in order to help keep interest rates low, to keep the economy going. And then on top of that, I don't think the longevity, obviously, is going to be as great as it was back then. Excuse me, sorry. So with that being said, we're going to see a little bit of a dip in the market for a short period of time. And it is a great time to get your foot back into it, because I think you're going to see that you'll have opportunity to find some properties out there. People are still listing. If you follow Facebook and everything, I'm constantly seeing new listings on a daily basis.
Mm-hmm.
So the activity is there. Again, I know that we're all sitting at our homes, watching the world pass us by, working and doing that. But at the same time, it's going to be short-lived. It's not going to be a long-term, and it's not going to take as long for us to rebound as it did back in 2008.
Okay, thanks for sharing that. Another item that's being talked about a lot and acted on with this government relief legislation that was passed recently, we have SBA loans, Small Business Administration loans,
Yes.
currently being made available to provide, again, some financial relief for those who are small business owners, self-employed, independent contractors, and the like. And for folks who don't know what I'm talking about and might be able to take advantage of that, you go to the website sba.gov, and right there at the top, you're going to see something you can click on called COVID-19 relief options and additional resources. So that's where you go to that. So we're not going to dig into that, but my question is, folks that are taking advantage of that, are applying for that, do want some relief to hold them over for a month, 2 months, 3 months, who are self-employed, et cetera. Are those loans, are they considered forgiven loans? And also, do you think that, what kind of impact will that have on somebody trying to be eligible for a mortgage in the next 3, 6, 12 months? Because I know there's a timeline before which you will start having to repay that, because that's a loan, right? That's not just free money not to be paid back.
It is going to depend on the details of the situation. And this is something new that's coming out, obviously. And as we gain a little more time and we start to see how it does have an impact. But from what I understand, for the business owners, I don't feel that this is a negative impact. Like forbearance, it can create more of a problem. This type of a loan can help businesses survive. It is supposedly to be forgiven. Obviously, it's going to affect the business side, not a personal side. So if somebody is looking to buy a home in the near future or refinance, and they take this opportunity and take out one of these loans, worst case scenario, the payment may be counted in the debt ratio towards the business or calculated towards the business cash flow. But on the individual side, they should be just fine. So I don't see that as an impact. I think that's a win-win is what it boils down to. Anything that can get some cash flow into these businesses, allow people to come out of this faster and pick up where we left off and get everybody back to work quickly, I think is going to be a great thing.
Yeah, because that's what we want, right? We want everybody to get
Right.
back to their new normal as quickly as possible and survive and have as less stress during these times as possible. So again, that's sba.gov for those of you who are small business owners, self-employed, have a small payroll of employees, etc. And you're thinking of buying or investing as well in real estate, and you just want to know what that impact is. Thanks for sharing what we do know now about it. That's it. Any other words of advice you want to give to people out there before we wrap up?
The biggest thing I would say is that because everything is constantly changing between the loans, the information that's coming out, before you make any decision, contact a professional. Speak to your real estate agent that you want to work with. Speak to the mortgage person that you feel comfortable with. Gain the knowledge and perspective that they have to help you make the right decision for you and your family so you don't have a negative impact. The knee-jerk reaction of, hey, this is free money, or I can take care of this or take advantage of that, make sure you dig to the bottom of it before you jump. That would be my advice.
Thanks. That's great advice from a great lender. So speaking of which, hey, Jeffrey, how do people get a hold of you if they do have some more questions about lending and all this? What's your contact? How do they get you?
Okay,
and I'll post this with my repost as well, but excellent. Tell everybody.
Excellent. My phone number is 404-277-6044. Again, that's 404-277-6044. If you Google me, I'm on Facebook as well. And then my email address is jeffrey.heckman@southeastmortgage.com. And Jeffrey is spelled R-E-Y, not E-R-Y.
All right, R-E-Y. Thank you, Jeffrey. Again, Jeffrey with Southeast Mortgage, giving us some great advice today. And we hope you guys heed that. And if you have any more questions for me, of course, get a hold of me, marjoriesellshomes@gmail.com. And that is spelled M-A-R-J-O-R-Y. That nobody spells that way. marjoriesellshomes@gmail.com, or just give me a call at 678-386-6971. Always good talking to you. Thank you for your wisdom and advice. And
My pleasure. Thank you for allowing me to jump on here with you today.
yeah, stay healthy, stay well, and we'll talk soon.
Take care now. Bye,
All right.
guys.
Thanks. Bye, everybody.